So hello class, welcome to the first discussion for accounting for business combination. Okay, so to start with, let's discuss first the definition of a business combination. So a business combination is a transaction or other event in which an acquirer obtains control of one or more businesses. Okay, so this transaction, sometimes referred to as true mergers or mergers of equals, are also business combinations, as that term is used in the International Financial Reporting Standard. So there are two methods or modes wherein an acquirer can obtain control of one or more businesses. So the first one is a merger. So a merger, this is where an acquirer wholly purchases a company, or the acquirer purchases all the net assets of an acquiree. So as a result, the acquiring company will remain as a legal entity while the acquired company will be totally dissolved. So this can be viewed as A plus B is equal to A or B. So if it's A plus B is equal to A, then A yung acquirer, tsaka B yung acquiree, Then si A will remain as a legal entity, Siya yung surviving company, at saka si B will be dissolved. So, if it's A plus B is equal to B, then si B yung surviving entity or yung legal entity, then si A yung acquiree, o siya yung ma-dissolve. Okay. The other one is a stock acquisition. Okay. In a stock acquisition, if yung merger is acquisition of net assets, the stock acquisition, so this mode of business combination is where the acquirer purchase certain shares, enough of a company for the purpose of obtaining control, So mag-buy siya ng shares, kay acquiree for the purpose of obtaining control. So this can be viewed as A plus B is equal to C. Meaning to say, if si A yung acquirer, then si B yung acquiree, si A will become the parent, at saka si B, si subsidiary. So, in stock acquisition, there is a parent and subsidiary relationship. So, si A will prepare its separate financial statements, at saka si B naman will remain as a legal entity, also prepare its financial statements. So unlike with the merger wherein the acquiree will be dissolved, so in stock acquisition, both the acquirer and the acquiree, or the parent and the subsidiary, will remain as a legal entity, But at the end of the reporting period, a new corporation or a new entity will be formed. This is the consolidated entity of the parent and the subsidiary. So again, both the parent and the subsidiary will prepare its financial statements, but at the end of the reporting period, those separate financial statements of the parent and the subsidiary will be consolidated. So it's the same concept with yung combined financial statements of the home office and the branch. So let's have a comparison between a merger and a stock acquisition. So yung nature, yung sa merger, si acquirer, siya yung legal entity or siya yung surviving company. Si acquiree naman, siya yung mali-dissolve na entity. However, for stock acquisition, okay, both the parent, siya yung acquirer, at saka si acquiree, si subsidiary, will remain as a legal entity or a separate entity. Then, at the end of the reporting period, we'll do consolidation. You consolidate the parent and subsidiary na financial statements because they are considered one single entity. Yung nature niya, on merger, that's a purchase of net assets. However, for stock acquisition, that's purchase of stocks. Yung eliminating entries naman, since sa merger, yung acquiree is ma-dissolve, of course, i-eliminate na yung records ng acquiree, no? Or yung company na ma-dissolve. Okay? However, for stock acquisition, for eliminating entries, no? So, it shall be done in a working paper. So, that's the same thing na ginagawa natin sa home office and branch na pag-combine sa financial statements. So, all the eliminating entries will be in the working papers. Okay, so IFRS 3 mandates that the entity shall account for each business combination by applying the acquisition method. Again, so what are the steps in applying the acquisition method? So the first one, or yung step 1, is to determining whether the transaction or event is a business combination. Step 2 is to identify who is the acquirer. And then for step 3, you're determining the acquisition date. And step 4 is recognizing and measuring the identifiable assets acquired, the liabilities assumed, and any non-controlling interest in the acquiree. So step 5 is measuring consideration and determining what is part of the business combination. So step 6, that's recognizing and measuring goodwill or gain from a bargain purchase. And step 7 is subsequent measurement and accounting. So in a business combination, it is very important to determine who is the acquirer. Again, the acquirer is the entity that obtains control of another entity. So in case of merger or purchase of net assets, si acquirer yung legal entity na mag-remain or yung surviving entity. In case naman of acquisition or yung consolidation, si acquirer, siya yung parent. Si acquirer yung parent. Okay, so since business combination is a transactions wherein an acquirer obtains control of one or more entities or businesses, when there is an existence of a control, so an investor controls an investee when it is exposed or has rights to variable returns from its involvement with the investee and has the ability to affect those returns through its power over the investee. Or control is the power to govern, not just to participate, but to govern the financial and operating policies of an entity so as to obtain benefits from its activities. So, control is generally presumed to exist when the parent owns directly or indirectly through subsidiaries more than half, meaning to say more than 50% of the voting power of an entity. So, if an acquirer purchases more than half of the voting power of an entity, then it is presumed that the acquirer obtained control the acquiree. So the default presumption is more than 50%. More than 50% of the voting power of an entity. Also, in business combination, it is very important to determine when is the acquisition date. Kasi it is the date in which the acquirer obtains control over the acquiree. So, it is generally the date in which the acquirer legally transferred the consideration. So, i-transfer na ni acquirer yung purchase price niya or yung consideration transferred niya kay acquiree. And then, it is the date in which the acquirer acquires the assets. So, i-purchase niya yung assets and assume the liabilities of the acquiree. Or it is the closing date. So, it is very important to determine when is the acquisition dates because all the consideration transferred and all the assets and liabilities of the acquiree shall be measured at fair value on the acquisition date. So, Yung consideration transferred or yung purchase price, no? So, the consideration transferred in a business combination shall be measured at fair value. No? So, we shall be calculated as the sum of the acquisition date fair value of the assets transferred by the acquirer, the liabilities incurred by the acquirer to the former owners of the acquiree, and the equity interest issued by the acquirer. Okay. So, yung consideration transferred natin, no? Ni acquirer kay acquiree could either be yung assets transferred, the acquiree, so it could either be cash or non-cash assets na i-transfer ni acquirer kay acquiree, no, as part of the consideration. So, pwede din na the acquirer may issue bonds or issue notes, no, to purchase, no, as part of the consideration given by the acquirer to the former owners of the acquiree. Or pwede din that the acquirer will issue its own shares. No? It will issue its own shares to purchase the acquiree. Okay, so also part of the consideration transferred is the contingent consideration. So, contingent consideration is the amount of consideration to be paid by an acquirer to the acquiree in a business combination which is dependent on some future event such as financial performance of the acquiree. So, it is recognized as either an equity or liability. So, yung contingent consideration is para siyang additional payment ni acquirer kay acquiree. Pero, yung payment, no, so magdepende siya sa happening of a future event, no? So, if the future event will eventually happen, then there is an additional payment, no, from the acquirer to the acquiree. Since for the word itself, contingent, no, it's it depends on the happening of the event, of the future event. Okay, so the consideration the acquirer transfers in exchange for the acquiree includes any asset or liability resulting from a contingent consideration arrangement. So the acquirer shall measure the acquisition date fair value of the contingent consideration as part of the consideration transferred in exchange for the acquiree. So since the contingent consideration is also part of the consideration transferred, it shall also be measured at fair value. So since all the assets acquired, liabilities assumed, no, and the consideration transferred shall all be measured at fair value at the acquisition date. However, there are certain items in the consideration transferred, in the assets acquired and liabilities assumed that are not yet final. No? So may measurement period. So yung measurement period is the period within which the acquirer shall finalize the acquisition date fair value of the assets acquired, liabilities assumed, and consideration transferred. So the measurement period should not exceed 1 year from the acquisition date. No? So pwede pa mag-change yung fair value ng assets, liabilities, no, and yung consideration transferred ni acquirer. So, adjustments relating to the acquisition date fair value brought by information determined during the measurement period shall be adjusted to goodwill or gain recognized at acquisition. Okay, so any adjustments relating to acquisition date fair values shall be adjusted to goodwill or gain. So, depende. Okay, so let's have accounting for acquisition-related costs. All acquisition-related costs generally is accounted for as expenses. All direct and indirect costs relating to acquisition shall be expensed outright. However, cost to issue debt or equity securities shall be recognized in accordance with IAS 32 and IFRS 9. So, yung cost to issue debt natin, sometimes ina-amortize siya over the life of the debt. Then, yung equity naman, no, say for example, si acquirer issued shares, no, or issued its equity interest, or in order to obtain control kay acquiree. So, if there are transaction costs na ma-incur, no, it shall be deducted from the equity, no, net of any related income tax benefit to the extent they are incremental costs directly attributable to the equity transaction that otherwise would have been avoided. So you take note lang na yung stock transaction cost or stock acquisition cost, no? Okay? So yung ma-incur mo na cost when you issue shares, no, shall be deducted from the equity. So particularly, i-absorb siya ni additional paid-in capital. Okay? Kasi if there is an excess over the fair value of the shares issued over its par, di ba, i-allocate siya kay additional paid-in capital. So if may additional cost pa na ma-incur in relating to issuance of a share, then it shall be absorbed also by the additional paid-in capital. If di kaya i-absorb the additional paid-in capital, that will be treated as an expense or a deduction in the retained earnings. Okay, so part of the business combination are the net assets acquired. No? So, in case of merger, diba, the acquirer will purchase all the net assets of the acquiree. And also for consolidation, both the assets and liabilities of the parent and subsidiary, or the acquirer and the acquiree, will be consolidated. So as of the acquisition date, the acquirer shall recognize separately from goodwill. You take note that we only recognize identifiable assets. So we don't consider not unidentifiable assets such as goodwill. No? So those identifiable assets acquired, the liabilities assumed, and any non-controlling interest in the acquiree shall be measured, no, at fair values or acquisition date fair values. And also yung liabilities include contingent liabilities. Okay. Again, all the net assets acquired, meaning to say the assets less the liabilities assumed, shall be measured at fair value. So, what is a non-controlling interest? So, a non-controlling interest is the equity in a subsidiary not attributable directly to a parent. So, yung non-controlling interest, mag-arise lang yan siya if it's a stock acquisition. Okay? But also, if it is 100% stock acquisition, wala ding non-controlling interest. So, kasi pag 100% stock acquisition, wholly owned subsidiary mo na yun, meaning to say, all the equity of the subsidiary is kay parent, no? So if, di ba, there is a control if the parent or the acquirer acquired more than half of the voting power of an entity. No? So if the acquirer purchased more than half of the voting power of an entity, then there is a control. No? So that's a business combination. No? However, if it's less than 100% but more than half of voting power, so my presence of a non-controlling interest. Say for example, the parent acquired 80% of the outstanding shares of the subsidiary. No, so yung controlling interest lang niya is 80%. So there is a 20% non-controlling interest. No, so for each business combination, the acquirer shall measure at the acquisition date components of non-controlling interest in the acquiree that are present ownership interest and entitle their holders to a proportionate share of entity's net assets in the event of liquidation at either, so pwede siya at fair value, yung share ni non-controlling is at fair value, or the present ownership's interest proportionate share in the recognized amounts of acquiree's identifiable net assets. Meaning to say, yung share lang ni NCI is proportionate sa fair value of the assets and liabilities of the acquiree or the subsidiary. So all other components of non-controlling interest shall be measured at their acquisition date fair values unless other measurement basis is required by IFRS. So, yung fair value of non-controlling NCI or yung basis ng fair value of NCI is quoted price in an active market for the equity shares or other valuation techniques if there are no active market for the equity securities. So, the fair value of acquirer's interest in the acquiree and a non-controlling interest on a per share basis might differ primarily to the inclusion of control premium in the per share value of the acquirer's interest in the acquiree. So, if may control premium, then mag-differ na yung per share valuation of the interest in the acquiree. So next, how do we determine the goodwill and gain recognition and measurement? So goodwill or gain shall be recognized as a difference of D. So yung difference niya is the aggregate of, so the sum of the consideration transferred, measured in accordance with IFRS, meaning consideration transferred at fair value, plus the amount of non-controlling interest in the acquiree, measured in accordance with IFRS, and any business combination achieved in stages. Okay, so yung present value of the previously held equity interest in the acquiree. So ano itong business combination achieved in stages? So say for example, si parent holder of a 30% share in an investee. So since 30% naman yung share niya, so wala pa siyang controlling interest. Kasi di pa man siya more than half of the voting power of an entity. So, say for example, yung 30%, the acquirer or yung parent purchased another 50%. So, therefore, the share na ng acquirer or ng parent is 80%. So, 30% na previously held interest and then 50% additional share na gi-acquire niya, 50%, then therefore 80% na yung controlling interest, which is more than 50%. So to account for goodwill or gain, you consider the fair value of the 30%, yung previously held equity interest. Okay, so again, yung goodwill or gain is the difference of yung aggregate ng consideration transferred, non-controlling interest, and the present value of previously held interest, less the net assets acquired, the net of the acquisition date amounts of identifiable assets acquired and liabilities assumed in accordance with the IFRS. Or simply, to compute for the goodwill or bargain purchase gain, that's the consideration transferred plus non-controlling interest and the fair value of the previously held equity interest less net assets of the acquiree. So, in case of merger, we only have consideration transferred and less net assets ni acquiree. Kasi mag-arise lang man yung non-controlling interest, and fair value of previously held equity interest if it's stock acquisition na less than 100%. Okay, so in the next video, we shall be discussing sample problem in relation to merger, or statutory merger. So, thank you for listening. Then see you on the next video.